This is Colin Cattell with Palisade Radio. Back on the show with us is my good friend Jeb Handwerger, publisher of GoldStockTrades.com. This is going to be a really exciting segment where we discuss the geopolitical issues facing the world, which could spark a severe rise in the price of commodities. Jeb, thanks for joining us.
Thanks, Colin, for having me back with you.
A couple months back, you called for potential black swan events that could drive the prices of many commodities higher. Today we have ISIS systematically overtaking Iraq and Syria. They now control many of the oil fields in those countries and are defending them with weapons provided by the United States military. Next is the Israel and Hamas conflict, and of course the issues coming out of Russia and Ukraine. Much of Europe is placing sanctions against Russia, which could provide major blowback if Putin decides to start diverting Russia's natural resources towards China and other Eastern markets. What does the geopolitical landscape spell for commodities?
Well, you really summarized it all up in the question, and all this uncertainty is the fuel for the sectors that we're in, which is the precious metals and energy sector. What you're saying, we have uncertainty in the Middle East, we have uncertainty in Europe, and we also have uncertainty in the South China Seas in Asia. So these are all when we look back at history, the invasion of Iraq in 2003 was a huge boost. From 2003 to 2007, there was a major rally in the juniors and in precious metals, and this is one of the major catalysts: uncertainty, war. Many are saying that we're going into a cycle here of uncertainty and war, and this, as unfortunate as it looks, we're fortunate that we're in the right sectors, that we've been prepared for this, and rising prices in the metals, and uncertainty in the equity markets, and some of the charts here, if you're looking at some of the charts in the junior miners, they're showing an inverse head and shoulders pattern, bottoming pattern. So I believe that we're at a potential turning point for the junior mining equities, a golden cross that could signal the final turn from a secular bear market that we faced since 2011 for over 3 years, to the beginning of an uptrend which could last 4 to 7 years, similar to what we saw in 2003 to 2007, when we saw oil prices skyrocketing, copper prices rising, and precious metals prices rising. And from 2007 to 2014, we've kind of had this long-term correction in the equities, in the mining equities. So I think that this is a major turning point. If it holds here, crosses above the 50-day and 200-day moving average, we could be at the beginning stages of a secular uptrend. And we've seen this before in the miners, how they've been able to outperform the bullion and the commodities. We saw that in 2003 to 2007, and I think that we could be on the verge of seeing that again.
Right now we're in the summer doldrums. Historically speaking, junior equities pull back in the summer months, but my trading screens are starting to light up green. Basing patterns are looking strong. Many companies have emerged with strong rallies. The memories of investors can be very short, but we must remember the incredible rallies that take place in junior stocks time and time again. I'm convinced it'll happen again, and those investors who are positioned correctly will make returns that cannot be found anywhere else. Why is this fall going to be a memorable one?
Well, it's what's led up to this fall, and in this year, 2014 alone, we've seen increased capital accumulation in the GDXJ, rising volume throughout the year, and versus the S&P 500, we've seen a rising market but on lower volume. So we're seeing the exact opposite with the overbought equities, and we're seeing accumulation in undervalued junior miners. And I think that as the general equities are beginning to reach this overbought level, as the equity markets correct, capital is going to start to flow into the sectors that will benefit from an inflationary cycle, which is the metals and mining sector. And I think big money is already entering the junior miner since the beginning of 2014, if you track the volume. Right now, as I mentioned in the previous question, there's that inverse head and shoulders, and we're beginning to break out on that, and we're even beginning to see the junior miners, several of the junior miners, break out, especially the ones with higher grade assets and lower capex in friendly jurisdictions. They've already begun to break out. So there's a lot of signs that this fall could be possibly the beginning of a major uptrend, and I think that the smart money is kind of positioning and evaluating, anticipating a post-Labor Day rally.
Let's step back a second and discuss just how deeply undervalued these junior gold stocks are trading. In comparison to gold, in comparison to the stock market, in comparison to just about every metric possible, your research has told you that the situation we're in now is unprecedented historically. Is this truly the case?
Yeah, well, it's interesting. In the 2008-2009 correction, we saw the XAU fall from 200 to below 80. That was more than a 50% decline, even though, gold only corrected from $1,000 to $700 an ounce. So same way here, gold corrected, from 1900 to 1200, and, we're seeing the 1200 ounce range, and the XAU is trading around 100. So, it's if gold moves up even $50 or $100 an ounce, or just stays flat, the miners and the mining indices could have a much larger percentage gains. So the leverage opportunity is really in the miners. The miners outperformed when we saw this decline situation in the miners back in 2008 and 2009, and back in year 2000. When you saw the miners so deeply discounted like this to bullion, when the investors who bought at that time were able to outperform the equity markets and gold by a wide margin from the 2000 to 2008 cycle. So, for investors, I think the real value will be in the junior gold miners. You can buy the index, the GDXJ, and there's other ETFs out there. But, I like to find the companies that can outperform, the producers and their junior peers and the benchmarks. And those are the companies that have the good fundamentals, the best technical data, and are currently out of favor or being overlooked. And there are opportunities, if you do your homework in the junior mining sector, to beat those indexes.
Jeb, on that note, thanks so much for joining us today. It's always a pleasure.
Thanks, Colin, and I'm excited for the rest of 2014, and I'll keep you posted.
Thanks, you and me both.